The topic of today's webinar is your PPP loan, navigating PPP loan updates. If you want to find out about the latest PPP loan and forgiveness updates, you've come to the right place. My name is Carter Freeman. I'm Vice President of the Western Region based in Denver, Colorado. For those of you who are new to VCFO, we are a professional services firm specializing in finance, accounting, human resources, and recruiting. With offices in Austin, Dallas, Houston, and Denver, VCFO has been helping clients grow stronger since 1996. With me today are Michael Bennett, the consulting CFO in the Denver office, and Jennifer Lennarz, also a consulting CFO and resident PPP specialist and expert from our Austin headquarters. If you have questions, please submit them with the Q&A button, and you can do it at any time during the webinar. You don't have to wait till the end. And we'll respond to as many as we can at the end of the webinar. We will publish a link to the recording via follow-up email, and we'll respond in a few days to all the questions that we're not able to get to during the webinar. With that, I'd like to begin our agenda. Most of our talk today will be on the latest updates on forgiveness. In recent weeks, the PPP Flexibility Act of 2020 has been passed into law. New and modified forgiveness applications have been issued, as well as interim final rules. And in fact, some as recently as last night. We'll also touch on accounting for your PPP loan and some of the tax considerations. We'll talk about some of the pending legislation, and finally, we'll discuss some of the decisions and potential strategies you may need to consider in getting the most forgiveness for your PPP loan. And as I said, we'll end with Q&A. One of the big changes they made has to do with the split between payroll and non-payroll costs. In the original rules, payroll costs had to be at least 75% of the forgiveness amount and non-payroll costs 25%. Now they've changed that to 60-40. So for some companies, this is a big deal. It'll significantly increase the amount of forgivable loan, in that your non-payroll costs can now be as much as 40% of your forgiveness amount. The payroll costs can be 60% or higher. If your payroll costs are less than 60%, the forgiveness amount will be ratably reduced. Also, we've had questions all throughout this process about the definitions of some non-payroll costs, specifically utilities, internet access, and transportation. These costs, there's some ambiguity and question about them. The short story is that no new guidance has been issued. All the questions still remain. We may see guidance in the future, and we may not. The other biggest change that they made was to effectively extend the period of time that you have to achieve forgiveness of your PPP loan. And there's some flexibility having to do with some of the dates. The forgiveness is it's calculated either over an 8-week or 24-week period. The default now is 24 weeks. If your loan was approved prior to June 5, you may elect an 8-week period. The forgiveness application also, particularly for people in a 24-week period, if you get the forgiveness before 24 weeks, you can actually submit your application prior to the end of that period. You don't have to calculate all the way out through 24 weeks. The one caveat is that if you have salary reductions in excess of 25%, you have to account for those over the full either 8 or 24-week period that you're in, which is to say you extrapolate. If you're in a 24-week period and say you achieve forgiveness in 12 weeks and that's what you submit on, then you have to extrapolate your salary reductions over 24 weeks. let's see, June 30 was a very prominent date in the original rules. That's been changed now to December 31 with respect to forgiveness. Some of the safe harbors and different things keyed on that June 30 date. So it's now as though that date never existed. It's December 31. One example being the FTE reduction test. It's the date for that reduction test is December 31. However, you have the flexibility to also look at that test on your submission date. So there's some flexibility around it. And then finally, a big change that they made is the period of time that you have to pay it back if your loan was originated. If your loan was originated before June 5, you can extend your loan from 2 to 5 years if the lender agrees. If it was originated after June 5, then it's a 5-year loan anyway. But so there's some debate and discussion about whether lenders generally will agree to having the loans extended to 5 years for the simple reason that it is in their interest to do so, it being a 1% loan on their balance sheet. So economically, it may not make sense, but from a, shall we say, a political PR perspective, they may be more or less compelled to extend 5 years. We'll see how lenders behave, both individual institutions and in general. There's been some guidance about the maximum compensation over the 24-week period and some limitations. Jennifer, if you would speak to this topic.
Absolutely. Thank you, Carter. Good morning, everybody. So yeah, when they changed the period from 8-week to 24 weeks, they also changed the maximum compensation that was allowed. So if you remember, under the 8-week period, it was $15,385 maximum, which was a maximum of $100,000 annual salary prorated over an 8-week period. Well, now they've prorated that over a 24 weeks. So using that 24 weeks period, the maximum for an individual employee is now $46,154. And as I said, it is the same calculation. Now, one of the other things that they did with the Flexibility Act is they said owner employees and self-employed individuals are actually going to have a maximum of $20,833, or a 2.5-month equivalent of 2019, whichever one is lower. Now that $20,833, that is actually $100,000 prorated for 2.5 months. Also, self-employed, general partner, or owner employee of S Corporation, no separate forgiveness for health insurance, and self-employed general partner, no forgiveness for retirement expenses. Now, the latest interim final rule on forgiveness goes into detail on their rationale and thinking here. And basically what they are saying is, look, these amounts are already included in your net, in your wages associated with the income of the entity. Therefore, they don't want you double counting, okay? Owner employees of an S Corp, retirement expenses capped at 2.5 months. And again, this gets into that double counting issue. They only want everybody to get these amounts one time.
Right, right. And they don't want an owner to have a windfall in 2020, right? Compared to
that's correct. That's absolutely correct, Joe. They didn't want an owner that, say, had one employee. They get rid of that one employee and end up being able to take 24 weeks. They said, no, you know, you're not going to get 5 months of salary. You're going to be limited to the 2.5 months. Okay, so last week or the beginning of this week, new loan forgiveness applications came out. So there is what they are calling a new simplified loan forgiveness application. If you remember the original application, it was 12 pages long. So what did they do? They stripped out the instructions. So now you have a 5-page loan application, but you have 7 pages of instructions. the general application has not changed. They have added a new easy loan forgiveness application, which I'll go into in a second. And they've also said lenders can use their own forgiveness application. They don't have to use the one being done that's provided by the SBA. So make sure you discuss this with your lender to know what they are using so you fill out the right forms. Next slide, Carter. Okay, the requirements for the easy forgiveness application. In order to do the easy application, you have to be able to check one of 3 boxes, okay? So here are the requirements that you have to meet one of. First, self-employed individual, independent contractor, or sole proprietor, no employees at the time of PPP forgiveness application. You can check that box and you can use the forgiveness application. Next one, no salary or wage reductions greater than 25%, and you did not reduce the number of employees or average paid hours. You're gonna have to do some calculations on FTEs to make sure that you've done that, unless you just have a couple of employees and you can go, okay, you know I didn't reduce anybody's hours and I know I have the same number of employees. The last one is no salary or wage reductions greater than 25%, and borrower was not able to operate at same level of business activity due to compliance with COVID-19 related requirements or guidance. A little bit later, we go into a little bit more of a definition around what is involved in compliance with those. Next slide. Now, the last thing they have done is through the interim final rules, they have told us, given us sort of what a timeline will be. So what they have said is, as a borrower, you have 10 months from the end of your covered period to submit a forgiveness application, okay? So they're really trying to make sure that people have plenty of time to fill out these applications properly. Then once it goes to the lender has 60 days to review and make a decision. Then once the lender passes it to the SBA has 90 days to review. Now, the important thing to remember here is if you put all of these little pieces together, this could be a loan balance that's on your books until 2022. It is possible that forgiveness could be that far out. So we just need to be cognizant of that.
Let's see, there have also been some changes to the safe harbor. There's some new safe harbors and also what they call exceptions. Michael, if you could walk us through those.
Sure, thanks, Carter. So, with the changes, it's been great from the standpoint that they've extended out, maturity dates here, deadlines, and made it quite a bit more favorable for borrowers. But there clearly are some gotchas, and there's some safe harbors and some rules that we want to clear up here and talk a bit about strategy. And that is, again, this date of June 30th, as Jennifer discussed earlier, has essentially gone away, and they've replaced it with December 31st. So wages must be restored by the earlier of December 31st, and date applications submitted to levels and pay periods that included February 15th. And those reductions must have occurred between 15th and April 26th. So what they're saying here is they're giving us a little bit more time to restore our wages, but they're pretty clear that those reductions that are included in this calculation, we're talking about those reductions that were made early on between February and 26th. If any reductions were made post April 26th, this safe harbor does not apply. And so I would step back, with this slide and just speak generally about just general strategy with a lot of these safe harbors, a lot of these rules. Really there's a decision tree for all of us. And that is, if we're at a point now where we can, essentially have our loan forgiven, we're going to recommend that you do so. and get it done. And we'll talk about that a little bit later. If due to some of these rules, we have a significant portion of that loan which is not forgiven, then there's a bit of a decision tree, because as we get into some of these safe harbors and some of these rules, it gets a little tricky, and it depends on what you think your business is going to look like over the next 6 months. And I would say it was maybe an easier decision to make a week ago, as it looked like coronavirus was being subsiding, and it looked like for most businesses out there, things are going to get better. But now, who knows? And so there is a bit of strategy with the rule set that exists today in terms of, forecasting the future and figuring out when to actually file for your forgiveness. So next slide, Carter. Okay, so they have given us some FTE reduction exceptions for the FTE rule. And so what they're saying here is that so long as good faith written offers have been made for previous employees before December 31st, they're going to give you an FTE reduction exception there. If you've made a good faith offer to restore any reduction in hours, which was rejected by that employee, or if employees were fired for cause, they voluntarily resigned, or voluntarily requested a reduction in hours. So clearly, what we recommend doing here is documenting. If you have made good faith efforts to restore the FTEs, restore the salaries, and for whatever reason that has not occurred, make sure you get that documented, throw it in your future audit file, and have that readily available if it ever comes up. So that's really the key to this slide, is make sure you get these things documented.
Yeah, we can't stress documentation enough.
All right. Also, this seems pretty fair. FTE reduction safe harbor if you're unable to operate. So what they're saying here is if there was a direct shutdown in your business that was, well, directly or indirectly issued by HHS or the CDC or OSHA, and you could not operate your business, they're going to give an exception here. So again, I think in certain cases, it will be very direct and very easy to claim, unable to operate. It might be indirect, but in any case, make sure you get that in the documentation for your audit file.
Yeah, and I think one of the things with this indirectly has to do with if the state or municipality told you to shut down, and you can trace that directive back to some guideline that came out of one of these entities. You have to document both, but that's what they mean by indirect.
Yeah,
so in that last bullet, go ahead.
That's exactly right. So what you hope is, your state told you to shut down. You get the state rule. The state rule quotes, oh, we're doing this because we're following CDC guidance. Yeah, the CDC guidance, you have both of them. That's your documentation. You fall into this safe harbor.
So that last bullet, again, there's been really no change there other than the date. So the FTE reduction safe harbor still exists, but it's out there further in the future. So again, they're saying if you made FTE reductions between February 15th and April 26th, they're going to allow you some additional time to restore that FTE count. But again, they're pushing out to December 31st. So you do have to ask yourself, based on where you're at, is your business going to get better or worse from an FTE perspective? And that's where some of the strategy comes in terms of when to file your application. Okay, and lastly here for me, accounting and taxes. So this has been a little gray for a while in terms of how to treat it from a GAAP perspective and taxes. We're getting a little more clarity, especially on the accounting side. So the first bullet there, for GAAP, we're required to treat it as debt until forgiveness is officially approved. So it's going to sit on the books, and again, Jennifer mentioned it may take quite a while to get, based on these timelines for the government entities, it could take a while. And so debt will sit on the books until you have an official forgiveness. And at that point, you're going to record a gain on the extinguishment of debt for your books. There are some additional rules for grant accounting. If you're expected to achieve forgiveness, you may account for this as income from the grant over a period. The costs are incurred. So little additional guidance there on GAAP. And finally with taxes, this is where it gets a little interesting. Again, if you're having your loan forgiven, that is excluded from income. So you would not be paying taxes on the forgiveness of your debt, but you are also not allowed to deduct the associated expenses. So that really makes some sense. Where it gets a little tricky though is the timing. So, and we believe that this is likely going to be cleared up as time goes on, because currently it just does not make logical sense if you're, the end of the 2020 tax year here, and you don't know whether or not your loan is going to be forgiven. I mean, do you deduct your expenses or don't you? Right. So there's a timeline here that they need to clean up, because right now it still remains unclear. So that is the current guidance for taxes.
Jennifer, I know you've been really keeping your pulse on the PPP loan as things come out, and as proposed legislation has been on the table. If you could talk to us about the P4 Act.
Yeah, so this is the latest thing that we've seen get submitted in the legislature, and it's actually been submitted in both the Senate and the House. It is called the Prioritized Paycheck Protection Program Act, shortened to P4. And basically what this says is sole proprietors, self-employed individuals, and companies with fewer than 100 employees who have exhausted their loan can go back and ask for additional funds. Okay. However, they have one other requirement in it, and that is that your revenue has to have dropped by at least 50%. Also, they have carved out about 20% of the funds that would be part of this program as specifically reserved for businesses with less than 10 employees, small businesses in underserved and rural communities. Because Congress is currently on their summer break, we haven't gotten a lot of indication as to whether this is going to move through the House. Well, we do know there's $128 billion in funds left. The last day for the regular PPP applications is June 30th. So, I mean, I really expect to see something. I keep an eye on this daily, and we'll follow this as we move forward.
And Jennifer, maybe if you would expand a little more on, we have all these dates and things and time periods and things like that, and you have to consider what's happening or could happen with your workforce. Maybe expand some more about the decisions and strategies one might consider or think about in applying for forgiveness or hiring or your workforce for that matter.
Yeah, so, as Michael had touched on some of this, but in a lot of ways, they have really complicated the strategy for businesses. Originally we had an 8-week period. So everybody was focused on that 8 weeks. Then they expanded it to 24 weeks. Okay, so then we were looking at 8 to 24. Then in one of the latest interim final rules, they came out and said, oh, by the way, you don't have to wait till the end of that 24 weeks. If you have exhausted all your funds, you can do it at some interim period, 12 weeks, 16 weeks. But remember that during that period, you're going to get penalized for wage reductions greater than 25%, FTE reductions, and those things have to be restored by the time you submit your application, or December 31st, which is, or December 31st, which is earlier. So what do you do if you're a company and, COVID's taking off again, and what you're like, boy, I've met my loan forgiveness, I've used up my money, but because we're shutting things down, like Texas, they shut down bars again today, I'm gonna have to let people go again. So you might have restored, and there's this back and forth, and you really got to think about, okay, when can I maximize the forgiveness? If I have to lay off employees, all of a sudden that's going to affect my forgiveness calculation again. So maybe I need to do my forgiveness calculation sooner, not later. Or, you know what, I'm suffering now, but I expect to be able to recover in November. We'll be getting into the holiday season. People will be buying things. So I'm going to wait till the last minute and do it. So it's really, you know, we really need to focus on what is our strategy? What is our business doing? What are we doing with sales? What are we doing with employees? What are we doing with salaries? Between now and year end, and you know, COVID's not going away by year end. So now is the time we need to think about strategy, not wait.
All right, and you know, we'll end here with a quick pitch before we get into some Q&A. But you know, we've talked generally about strategy today, and again, you know, recommend that we you get out there and start this process immediately if you can get your loan forgiven. God bless you, and get it done. And if you can't, then that's where, you know, I think some thought needs to take place. We can help with. We've got a number of clients where we're helping them with the PPP forgiveness process and going through the complicated calculations and making sure they have their documentation together. So we can help with that. Or you know, if there's just general, a lot of you know, the other thing we recommend is just a lot of cash forecasting and scenario planning, because there are a lot of unknowns. And if you're not doing that already, I mean, I would just you know, work with your teams to make sure that you're staying on top of your modeling and forecasting. That's something we can also help put together and work with you on, or anything else. So we're obviously here to help.
Yeah, that's exactly right. In fact, sensitivity analysis is going to be very important.
So let's see, I'd like to open it up to Q&A.
Okay, I'll start with the first question here. So the first one is, a client told me this week that they went to make their forgiveness application, and the lender told them they were not yet prepared to receive forgiveness applications. Have you encountered this? Any comments on lender's state of readiness? No, as Carter and Michael have said, that, you know, we are helping people with their forgiveness applications. You know, as a firm, we've helped over 25 clients get PPP loans. We're helping with the applications. I have not heard of a lender saying, hey, I'm not ready to take that. Does it surprise me? No, it doesn't surprise me one bit, because these loans and these rules, everything about it is changing almost daily. I mean, this week it's almost like we've had a new interim final rule every single day. So it doesn't surprise me that they're not ready. Is there anything in the guidance or anything the Treasury or SBA says, hey, lenders, you need to be ready to accept these now? No, there's nothing that is going to, in the guidance, that is going to make the lenders say, hey, you need to do this now. So Michael, you want to take
Sure, I got one. I got a question here. It just dropped off. Let me see. If an employee resigns during the coverage period, if we document that, do we get a pass for FTE count reduction? And that's what we were saying before, in terms of if it really is outside the company's control and in good faith, you know, that employee resigned, make sure you get it documented. But yes, you would get a pass on that FTE reduction.
Say, Jennifer, my screen has user error. Maybe you could get the next question.
Oh, absolutely, absolutely. Okay, so here's and I'm going to take some of the more complicated ones here. If you apply with the easy application, but 3 weeks later cut salaries 30%, are you still within the 24-week covered period? Is that allowed, or should you wait 24 weeks? If not sure, you can go the 24 weeks without cuts. Well, this gets in a little bit into what I was mentioning earlier, that that really the periods now are not a set 8 weeks or a 24 weeks, because they have said that you can file for forgiveness once you have exhausted your funds. So if you've exhausted your funds, you can apply for forgiveness. The language says earlier of submitting the application for forgiveness to your lender or December 31st. You've submitted it to your lender. The 24 weeks no longer applies to you. The December 31st no longer applies to you. And at that point in time, any wages you cut, salary, hours you cut, employees you lay off are no longer impacting your forgiveness. I will make one additional comment on this. I don't think the Treasury and the legislature has thought this one through very well. So I wouldn't be surprised if we see something else come out regarding this, but that's the way it's written at the moment. So, Michael?
Yeah, here's one. Well, in terms of strategy, if you've exhausted, dropped again. Okay, in terms of strategy, if you have exhausted your PPP loan at say 12 weeks, can you apply for forgiveness based on those 12 weeks and later have a layoff, say in week 20, and not have the FTE reduction in week 20 impact the forgiveness? So yes, I mean, if you are at 12 weeks and you've run the calculations and you've got substantially all of your loan forgiven, do so. And you'll be covered. As soon as the loan's forgiven, it is forgiven, and a lot of those metrics are not going to apply to you anymore.
Okay. Carter, is your screen back up, or should I keep going?
Why don't you, I think we're a little over. Why don't you do one more question? A little
Okay.
over, maybe one more.
Okay, so if an employee resigned, does that employee reduction affect our business opportunity to apply for forgiveness or use the easy forgiveness loan application? No, so the easy forgiveness loan application, if you remember, one of the requirements that I mentioned is no more than a 25% reduction in salary and no reduction in FTEs or paid hours worked. So, however, you do not get penalized if an employee resigns. Okay, that's a voluntary resignation. It is an exemption from the FTE. So you have 5 employees, everybody's salary stayed the same, one is resigned, you technically have 4 FTEs, you're still eligible because of that one that voluntarily resigned does not get held against you. And it's the same in the actual application, on the full application. There's actually a line on the table where you add that individual back in.
Hey, Carter, let me take one
Okay.
more, because I think it's a fun one. It's a fun one to end on, and I don't know the answer. It says, have you pondered the math where the 1% interest, hold on, where the 1% interest payback is cheaper than the income tax implications of not being able to expense the payroll it covered? And I think that, that's a great question, because, and I have not, but I think the point here is, in this presentation, we've given a lot of kind of general strategic guidance, but really it comes down to each individual business case. And, for some folks, you're really trying to maximize your forgiveness. And some folks are maximizing, hoarding cash retention. I mean, it just depends. And where I thought the strategy was a little clearer a week ago, it's really anyone's guess now. So I think, again, it just begs the question of making sure that we go through and scenario plan and run the calculations, because I think it's going to differ quite a bit now with each individual company.
Yeah, I think you're exactly right, Michael. And I think it is very important that this is not just an exercise where you go, okay, I'm going to do my calculation and I'm done. No, you need to go through the different options, look at the different options that you have, and decide which option is in the economic best interest of your company.
Well, thanks again for everyone for attending today. We will send out a follow-up email that will include a recording of the webinar and a PDF of the presentation and a link where we will respond to the questions. It takes us a few days to get the written responses posted on the website, but we will. And also, if you'd like to have a more in-depth discussion or sort of conversationally, please reach out to us. We're not that hard to find, and we're happy to chat and help.
Yes,
Thanks.
we're more than happy to talk with people.
Yeah, thanks all. Be safe in our COVID world, and wish you the very best on getting the most out of your PPP loan.
Thanks, everyone.
Thanks, guys.
All right. Bye.